All right, so real quick, right before the NVIDIA's earnings, is let's be honest, we all are kind of obviously expecting an upward surprise, more of a green outcome. Basically, we're expecting them to come out positive, at least on the revenue side. Although, let's be honest, I'm expecting earnings to be green in the surprise as well. Bottom line is, what does the market seems to be structuring in terms of the technical structure and signals ahead of the earnings? Now, some of you have already been following the channel and aware we basically are completely topping out what appears to be at least partially the internal cycle, um, irregardless of it actually is important how correlated the markets overall and NVIDIA are. And we may actually see somewhat of a very volatile price action on the report itself. For example, if we're looking objectively at our current support and resistance levels, we are obviously looking at 200, which is a very strong psychological level. Immediately then we are looking at 221.07. So these are the higher end support and resistance levels that may play out if the market ends up rallying based upon the earnings. But to be objective, we're going to look, for example, the weekly structure here. And of course, you know what? Let's start with the 1 hourly so we can get a better picture of what it is that we're looking at. So on the 1 hourly, we are basically running flat. I mean, as you can see, we've been running flat for some time now, right? Very same range. We are now becoming bullish dominant objectively and in bear dominant and bear territory, right? So we're below 50, so and we are our D is taking over. That red line is the D, the green line is the K. We're basically having the D taking over, giving way to that more of that bearish price action. This is just the hourly, and given how close we are to the end of trading, as you imagine, this is basically already the hints and the preparation of the market towards this. 4 hours. 4 hours is also objectively bearish, right? Again, it is bearish in bull territory, so objectively it may sort of swing up and down within the range of this channel, which brings it as high as 187 with some slippage 190. So all in all, not that much of a difference when it comes to sort of the range we've been moving within, right? Cyclicality structure-wise, there are other signs here that kind of matter to why it matters what we're seeing right now and how it plays very neatly into the market. But if you're not familiar with the cycles, it sort of doesn't matter. The daily, let's see, the daily, of course, is in bear territory, bullish dominant, but we are starting to see some weird behavior right here. And if we're seeing that the smaller time frames will behave more bearish like, and in fact the price action sort of gives away already we're moving in a sideways channel rather than an upwards trend, you can kind of identify which is more true. Although of course we may still sort of stay within the framework of this, given a rally upon the news we may get 200, for example, that sort of junction of things. If those are not sure what I'm talking about, I'm talking about the 200 itself and the channel ceiling, the resistance. So we may see this play out, but if we're looking at our weekly, what we recognize is we are bearish dominant, and we can kind of identify that, right here. The price action is sort of curving now. Instead of being objectively steep to the upside, it's now starting to curve inwards, kind of flattening out. And we can see that why is that is because, well, we're being taken over by that bearish momentum, basically by the sentiment of more selling than buying. Somebody's dumping. And as you can see, we already had these marked up, whether it's the various ceilings that could be tested. And in fact, it sort of appears to be that there could be a potential very clear process to this. We understand it can play out in multiple different ways, right? But as it appears to be right now, we are preparing to be more bearish than bullish. So pretty objectively we can identify that within the week time frame. And given that the monthly still have 2 days to close, and given this lack of momentum and loss of momentum, arguably you can see the difference between these candlesticks and this candlestick. And of course, given that we're going to have maybe a potential rally this evening, right? And it will then peak out at 194. Well, that will still look relatively tame comparison to these three. Of course, we may end up moving all the way to 221, in which case it will appear even stronger. At the end of the day, what it does is it's playing out its sort of peak moment right here, fighting the top of the channel, if so, and then breaking back down, given all that bearish momentum that we're seeing that is coming through on all fronts. You can see that, for example, this is our quarterly time frame, which is very, very bearish, right? So all in all, even if we're going to have a rally based upon this, which is not a given, by the way, we may actually get green results and positive surprise to the upside and still break down, so it really doesn't matter. It still may happen. In fact, it's kind of interesting and funny how throughout recent years we have seen moments. I'm not particularly not with NVIDIA, but we have seen moments where reports are bad or bad-ish or came worse than expected, and the market still did what it was meant to do, regardless of. That is the bottom line, I guess. That's it, boys and girls. I thought I'll bring you up to speed before the earnings call happens later this evening. I'm gonna take off and join Tom Nash's Academy meeting within about 27 minutes. And afterwards, I may potentially have another meeting with my own members, or at least a hangout, something we do quite often. Just hang out in the Discord. And those who don't know, there are only 3 days left. Let me show you. There are only 3 days left. I repeat, 3 days left. Only 3 days left to subscribe with a 50% discount, right? So right now, instead of this being $60, this tier, the advanced tier, which grants you 2 members meetings a week and various other perks like ad-free content and access to various channels that have, for example, Charting 101 and right now we're actually doing a ticker list that we're assembling with stocks that do have good potential to survive the more severe downfall that I've been expecting and talking about. We're finding these outliers and we're creating a list made by the members. You have the basic tier, of course, which is instead of $30 is $15, and if you click this little ticker, in fact, even more so, instead of it being, for example, $30, now it's $24 a month for a year. Right? You see, I told you it's for a year. I wasn't wrong. It's basically for the entire year. This is the absolute maximum I can give, $24. Instead, it's $12, and that is if you sign up for the annual sort of subscription. And also the Academy, the one-on-one Academy. Thank you for all the new joining members on both fronts, whether it's the Discord, the Patreon, in other words, the community overall, YouTube, all fronts. The one-on-one Academy especially. Those of you who don't know, it's now discounted, $500 discount. Instead of it being $3,500, it is $3,000, $3,000 basically. $3,000, and that's it. Within 3 days, all these discounts will be done and over with. So don't miss out. Join in right now, and you'll be in the know. You'll know why me and my members were prepared for these various downfalls, corrections. How are we dealing with it? What are the technical tools? How to use them? What it is, these cycles, these behaviors that we're talking about. All of that is discussed in the community, and in the one-on-one, it is being taught in depth. That's it, boys and girls. That's all I wanted to bring you for today. I'll see you on the next one. Bye for now.